Welcome back, subscribers, back with another video today, guys, and today I wanted to talk to you about why I think growth investing is great. And last time we just talked about why I thought dividend investing was great. And today here we are talking about why I think growth investing is great. You might be thinking to yourself, but Josh, I really don't understand where you're going with this. First you said you like dividend investing, now you're talking about growth investing. Which one is it going to be? Are you going to be a growth investor or are you going to be a dividend investor? You have to pick one. And the truth of the matter is you don't have to be one investor or another type of investor. It's just some preferences, and what I like to do about growth investing is very specific, and what I like about dividend investing is very specific. So let's get started on my thought analysis on why I think growth investing is really great. Hello again. I didn't think that I would be back so soon, but today I needed to tell you all about growth investing. Let me show you why growth investing is superior in every single way. In the past 6 months, I decided to purchase Okta shares for 10 shares at $28. I sold it for $35, profiting $70. I then made a purchase of Square stock times 10 for $35 and sold it for $53, profiting $180. I would need to spend almost $4,168 to get that kind of return from AT&T stock for a year's worth of investing, and I've done this in 6 months. I'm not saying that dividend investing isn't great. I have a very firm belief on why I like dividend investing, and you might be thinking to yourself, well, what did you do with that money that you got? And the truth of the matter is I took some of that money, I reinvested it into dividend-based companies. And you might be thinking to yourself, return was really great, why didn't you just buy more growth stocks and then flip money that way? Well, the truth of the matter is once you buy something and then, quickly sell it for a higher profit, not only will you have to pay capital gains, so I'll have to pay capital gains on all those stocks that I sold, but on top of that, I will also not have any of those shares anymore. I'm out of those shares. I made my money and I've gotten out. And now a lot of these companies that I believed in are even at higher valuations. So do you want to get in even higher at that point? Personally, I don't want to purchase them for what I sold them at and even higher valuations. I was happy with what I got in with, and I was happy with what I got out with. I started taking my money and putting it into something that I thought was undervalued. And a lot of my stocks look like this. They're just going down and down and down, because that's when I believe you make money when stocks go up, clearly, and then you sell or you get paid dividends. But another thought process to have is thinking about how buying low and selling high works. And I like to find brands and I like to find companies that I think have a long-term future growth or long-term sustainability, and then I invest in them. That's my investing strategy. I'm quite new to investing, so take this with a grain of salt. As always, I'm not your financial advisor. That's how I invest in stocks. And you might also be thinking, why didn't you just invest into the companies that you knew you were going to get a high return on? And the truth of the matter is I didn't know that these companies were going to grow to extraordinary values or grow so fast. I thought that they would grow in time, and that when they got to a good amount that I thought was a good point to sell, that I would sell. And I did. I did that really well with Micron. Micron went up to $61 and I sold at that point, but it also fell back down. And now it's on back up. It's just kind of how the stock market works. You have to know that, hey, this might be a good point to sell, and you can sell at that point. I don't think that there's anything wrong with taking a profit. Now, some of you might be thinking, well, you could have held on to Okta and look at where it is right now. It's way up. It's almost double what you sold it at. And that's very true. It's very true that I could have sold that stock at a much higher valuation, but once again, I'm only comfortable with dealing with what I feel is comfortable. I'm only going to sell when I believe it's a good time to sell, and I'm only going to buy when I think it's a good time to buy. And sometimes you're going to be wrong. Sometimes you're going to buy things at the wrong point, and sometimes you're going to sell things at the wrong point. But that's what I think really makes you guys a really good investor. If you start now and you start learning about investing and also learning about how the stock market works in general, the rise and fall of a bull market into a bear market. How do you make money during a bull run? How do you make money during a bear market? What do you do, and the steps you can take to get ahead financially. And I think it's very vital for you guys to understand this now, because I honestly believe that robotics will be taking over a large portion of jobs worldwide. And if it continues to do that over the next 10 to 20 years, how are you going to be prepared for it if you don't have anything to supplement your income right now? Google dropped 50% from its highs. Amazon dropped 50% from its highs during the last financial crisis. And if you look at a lot of dividend stocks during that time, they also didn't really drop as much as some of these high growth, high flying stocks did. Some of them lost 60, 70%. Some of them lost 50% of their value within a few months. And that's really scary if you think about how much people could have been investing in those stocks at that time. But I think right now in history, we could have another scenario where, maybe a year or two goes by and we might end up with another fire sale where you can just, purchase Google or Amazon at a much cheaper valuation. I don't know when it's coming. No one knows when it's coming, but being prepared for it, I think, is really important for you guys for the future. And it doesn't mean that you shouldn't invest now. I think that there's plenty of buying opportunities out there for specific stocks that may be able to recover or may be able to do better now that some tax laws have been put in place. With that being said, I like both dividend and growth investing, and I think you guys can do just an excellent series of returns here in the next 10 to 20 years if you just practice, learn, become a student of investing. With that being said, guys, thank you so much for watching. Subscribe if you haven't subscribed yet. Give me a like if you like this video today, guys, and I really appreciate you taking the time out of your day to watch the video. I hope to see you guys again next time.